for better or worse, our country is ran by the ultra rich people, right? And the ultra rich people, they don't like paying taxes and they like making a lot more money. So they want to find a way to hide their money legally and make more money, right? So since they write the tax code and since they come up with stuff, their favorite loophole to exploit that they created was in real estate. Return, you're getting a return on a $100 house, but you only put down 20%. Okay, so $20. So you're getting 6% on $100. So you made $106, which is better than bonds, but your return, your cash on cash return is higher than bonds and stocks because you only put down $20 to make that. So your cash on cash return is 30%. That just destroyed stocks. That just destroyed bonds. It destroyed everything. Okay. You get a ton of tax benefits. And then when you go to sell, you don't even have to pay taxes because like I said, the rich people wrote the tax system. You can do, it's called a 1031 exchange. You kick the can all the way down the road. You get into a bigger investment property. And then when you die, there's ways to make it so your kids don't even pay your taxes if they sell the properties. It's rigged, guys, but in our benefit. So use it. Hey guys, Alex here with Everything Utah Real Estate. So today we're going to be going through a couple of different things, mostly investing, specifically for 2023 and like early-ish 2024. So if you're watching this in 2024, this is still applicable to you, unless like the world's ended or something crazy. But if the world's ended, I don't know why you're watching this. So probably figure your crap out. Anyways, so we're going to be going through different avenues of real estate investing, why real estate is a great investment, compare it versus stocks, not go super in depth. We're going to have another video for that, but just go over the top, skim the surface, and just kind of talk about how to get around the high interest rates, and see some of the things that we can do about that. So Oscar, first things first, what are interest rates for investors right now?
So it's gonna really depend on, your situation. I feel like I use that word a lot. Depend.
Oh, you
It's
definitely
good it's good to know.
It's your favorite.
Yeah, it's good to know. Just know that, like whenever you're looking at real estate, by the way, just know that you're, that it's going to vary. Like every situation is completely different. So real estate, when you're getting into being a real estate investor, there are kind of two avenues that you can go about it. One is kind of a bit more of like a slowly turning into being an investor, and one more is, purchasing actual investment properties. So one, if you're looking to purchase properties that, right out the gate ought to be used as investment properties, your rates are going to be higher. So, and you're generally going to be putting more down. So with you're going to be going with to be, as with like government loans, those are all, you have to be living in it. So to buy a home as an investor, you are going to need to be putting down 15%. And often to get rates that aren't really gross, you're going to need to be putting down about 25% on a property. So 15 to 25% is generally what you're going to be looking at when you're buying a home strictly as an investment property. And rates are going to be a chunk higher than a purchase price, than if it's just a straight owner occupied. So if you're sitting at around kind of like a 7.5 for like a regular purchase, probably close to like around 8 is what you'd be thinking of for like an investment property, or somewhere around there. The other way of going out of getting investment properties is buying homes as your primary residence and then switching them into investment properties in the future. And that lets you buy homes as your own home and have the correct interest rate. And so how often do you see, Alex, with people that you work with, how often are people buying homes straight as investments as opposed to like converting their primary residences into investments over time?
It's a great question. Before we get into that, just so the audience
go
knows,
for it.
if you're buying a home as a primary, Do you have to do
Mm-hmm.
anything like finagle anything in terms of refinancing to turn into a rental?
Yeah, great question. So you want to make sure that you're being above board with whenever you're buying a property. So if you're buying a house as a primary residence, it needs to be your primary residence, but it doesn't need to always be your primary residence, and you don't need to do anything to change it. So if you buy a house as a primary residence, is with the expectation that you are going to be living in it for at least a year. After that time period, so if you've lived in a house for a year and then you decide to move, if you're moving out of state, if you're moving, down the street or whatever, um, then you can do that. You don't need to refinance your old home to change it. You still have the same rate and everything like that. Some loan products do have like differences. So like an FHA is a government loan, and they have some restrictions when you're switching your primary house to an investment. But general rule though is once you've lived in it for a year, you can move to a different house, still call it your primary residence, and get a lower rate than investment, put less down than you would for an investment, and start renting out your old house. So, which is a lot cheaper way of doing it. So.
Yeah. And if you're doing that, because I mean, my understanding is you have to have the intention of living in the home for a year, right? You don't have to live in it for a year if your job changes or something and you have to move. You can, but your intention has to be you're living in it for a year. That being said, if your goal is to primarily purchase homes as an investment property, you're living in them for a year, but you're going to move out, or does like underwriting or does the lender ever catch on thinking like, oh, hey, you're doing this on purpose, and can they like stop the deal, or do they not really care too much if you're above board?
Do you mean like if it's less than a year, or you mean like
if
over a year?
If you're waiting the full year period, do they ever catch on, or are they weird about it, or is it?
No, I haven't really. It's not considered like what it's called. So there's a term for it when you're not basically doing what was intended, and it's called occupancy fraud. So it is actually a type of fraud, to say basically that you have one intention for the house, but that's not actually true. So occupancy fraud is if you are, financing a home in a way that is not accurate, not representative of what's actually going to happen. If you are buying a house that is legitimately going to be your primary residence, it is going to be your home for a year, that's valid. That's correct. That's correct occupancy. And after that time, it's not an issue if you leave after that year. And if you could be moving up, like purchasing a condo, and then switching to a townhouse. If it's right next, like if it's right next door and the house is the exact same, they might be asking some additional questions. Generally, they want to see like some kind of like a reason, like some kind of an improvement. If it's like a short switch. But yeah, it's not an issue.
So
Does
like
that make sense?
if you're moving from condo to condo and it's like the next building over, they're going to say, hey, what the hell are you doing?
Yeah.
But if it's like
the exact same square footage, the exact same. Yeah.
What if you're moving from like, I don't know, like a third level condo to a first level condo, and your reasoning is just you don't like the stairs anymore?
Yeah. They just want to basically, have an explanation that you can put in there. So, a situation where you're moving to a better scenario. But yeah, just don't commit occupancy fraud if you're buying a house with one intention. Make like that should be the case. If there are exceptions, there are exceptions. Like if you're forced to move out of state for your work or things like that, those are different. But that if there needs to be kind of like a net benefit, right? Yeah. But yeah, that's kind of what you'll be looking at. But that way, it saves you a lot. First of all, because then you can rent out your previous place you were living. And then as well, you're not having to put 15-25% down on a house, and your interest rates are a lot less. So
yeah, that makes sense. Cool. And then just to answer your question,
Yeah.
it kind of just depends on the buyer, but I would say probably 60-40, maybe 70-30, are people who are they're just straight up investors. They're not going to occupy, and they're just buying the house as an investment property. That's probably about 60. And the rest are people who are, they're young.
Primary
they
conversions.
they're young. They want to get into investing. They don't want to put down 25%. So that's what they do. Like for myself, here's my opinion. The financing on investment properties right now is trash. It really sucks. And that being said, when you're putting down less money, your overall return increases, because you put down, let's say you're putting down $30,000 on a $600,000 property. Your return on that's going to be a lot more than if you were putting down $120,000, right? Just because it's still going to appreciate the same. You're still paying down. Well, you're not paying down the same amount of principal, but you're appreciating the same. You're still getting the same tax benefits, but your overall investment amount is less because you're leveraging more money, right? So that's my opinion, is the less money you can put down, the better, because your overall return increases. You're able to keep more cash in your pocket. You're able to use that money to buy more properties, et cetera, right? So doing it this way is honestly my favorite. If you're young and you're able to move every year, it's phenomenal. But if you're, if you have 5 kids and moving is a hassle every year, which I guess it is, right? For everybody, moving sucks. But, if it's just if it really sucks, then, it doesn't work. But yeah.
Yeah, for sure. So like what's, generally the people that are buying them as investments have kind of a bit more cash to sling around, which helps offset the payment that you would be having from like putting that much down. So, but I feel like a lot of people want to get into real estate investing because real estate investing does have huge upsides and can benefit you for years, right? It's all about kind of establishing and like getting on the road to passive income in the future. And the main reason kind of why I bring up kind of that route is kind of a big stumbling block. If you've got millions to sling around, then yeah, it's, investing in real estate is a little bit easier. But if you're not kind of in that ballpark just yet, that doesn't mean that you can't start on your train to investing in real estate, and investing and like starting on the path to passive income. Because I mean, you say this all the time, but the most important thing is to have a property, like any property, but like have a property, whether it's like condo, townhouse, like run of the mill house, right? But having a property is putting yourself on the path to passive income in the future.
Yeah.
So
let's talk about that. So let's talk about other investment avenues. So if you're a stock investor, if you prefer bonds for some reason, if you prefer these other avenues of investment and you're just barely starting to get into real estate investment or starting to just dip your toes in it to see how hot the water is, let's get into that. Let's compare and contrast. Like I said, we're not going to go super in depth of this kind of stuff, but I mean, me and you both invest in stocks as well. Stocks are phenomenal. Mm-hmm. They're great. But they're not the only thing you can do with your money, right? And in fact, that's in a lot of cases, that's not the best thing you can do with your money. But that being said, Oscar, what can people expect if they're investing in the stock market? What do their returns look like?
So the kind of principles of finance, kind of the basic principle of finance is high risk, high reward, which is almost, it's true very, very often of the case. If you're, the riskier you are, if it pans out, right? Like think of the lottery, right? There's a lot of risk. It's almost definite that you are losing your money with that scratch ticket. It's like almost as close to 100% chance as you can possibly be, right? But if you hit big, right, then the reward is a massive payout, right? So higher risk, higher reward. So all kind of often like different different avenues that are really common in types of investments are bonds. So think of like treasury bonds that the government issues, or think of like corporations issue bonds. And then there's the real estate market. So like owning a home. And so there's appreciation, different things like that. And then the stock market, which everyone's kind of familiar of, where you're buying shares, you're buying a percentage of a company. So generally, across those, and in that avenue is generally kind of the risk line. So bonds are very safe, even though stuff like with the U.S. debt ceiling and different things like that has sparked debates. Bonds are like the safest you can possibly get when it comes to investments, and the stock market, generally the stock market has the best return of the three. It is all over the map, and it like spikes up and drops down. It has like the biggest valleys of all of them, and sometimes has the biggest mountains. But the thing about real estate is it has a really, really good rate of return. And it is not even close to as volatile as stocks have. And so because they have in themselves a very intrinsic value. Like you've got a house, right? People always need a place to live. It's a very, like it's going to be needed. And it's something that appreciates over time. So you gain returns from that. And as well, you can rent it out and gain returns from that as well. So, overall, like from my perspective, real estate is such a phenomenal investment because it is very safe, but also has a phenomenal rate of return. What are your thoughts on it, Alex?
Yeah. So overall, like you hit the nail on the head. So the stock market has the highest returns in terms of percentage increase. Okay. So on average, the market, if you invest in the S&P 500 or like a broad ETF or something, you're going to get about 10%-ish return, maybe give or take 2% in any direction, right? About 10% return every year. Okay. Some years are more, some years are less, but on average about 10%. Okay. Bonds just kind of depends. I mean, right now bonds are actually pretty solid. They're 5.3 for like a 6-month bond, which is freaking crazy.
Yeah, it's nuts. Yeah.
Yeah, bonds are great. Like if and savings accounts are actually pretty good too right now, which is like crazy to say because usually you're getting like 0.001% return. Now you're getting 4.3. Like it's pretty good. And then real estate, it depends on the state, right? So some states you're going to barely keep up with inflation just because the demand isn't high over there. Some states, I don't even know, they're appreciating like 10% every year, which is crazy. I don't get it. But I don't even know a state. I don't think any state's really appreciating 10% every year, but some states are appreciating a lot quicker than others is what I'm saying, right? So in Utah specifically, we're appreciating almost 6% every year. Okay. So if you're appreciating 6% in real estate, you're getting 5.3% on bonds and you're getting 10% on stocks. Why would you invest in real estate? Real estate's a lot more risky, right, than a bond. You're getting a little less return on a bond, but your risk is way lower. You're not paying taxes or like property taxes or insurance or interest or anything, right? And with stocks, you're getting paid 10%, which is double what real estate is almost, right? And double what bonds are. So why would you invest in real estate? Well, let me tell you why. So for better or worse, our country is ran by the ultra rich people, right? And the ultra rich people, they don't like paying taxes and they like making a lot more money. Okay. And they write all of the laws in place, right? They have lobbyists and, the people in our government are rich too. So they want to find a way to hide their money legally and make more money, right? So since they write the tax code and since they come up with stuff, they have little loopholes for themselves, but we can also exploit those loopholes, right? It's not just for them, it's for everybody. You just have to have the money to really do it. And their favorite way to do it, their favorite loophole to exploit that they created was in real estate. Okay. You get so many benefits investing in real estate versus stocks. So let me, in layman's terms, let me explain. You throw in $100 in the stock market. Obviously, you're going to want to throw in more to get any serious return, but we'll just say $100 in the stock market. You're getting 10% return on that every year, compounding, of course, but at the end of a year, you only have $110. Okay. That's not going to really feed anybody at all, right? In bonds, and then at the end of the day, you also have taxes. So you sell those stocks, you have taxes to pay. Okay. There's no way to get around that unless you have like a Roth IRA or something. You invest in bonds, same $100, you're only making $5.30. Okay, cool. Go buy you like a Big Mac. I don't even think that'll buy a Big Mac anymore, actually, but go buy like a fry or something from McDonald's. I don't know. Cool, right? You made $5 after a year. Phenomenal. And guess what? The government's paying you that money, but they want some back too. So you have to pay taxes on that money. Oh, even better. So your return's really like 4%. Great. You invest $100 in real estate. First of all, if you can invest only $100 in real estate, cool. But just for numbers' sake, right? You invest $100 in real estate, but actually because it's leveraged. So let's just say it's a $100 house, right? For some reason, you find a $100 house. You only have to put down $20. Okay, so instead of buying a whole $100, the house worth $100, you only had to buy it with 20. Okay, so your return, you're getting a return on a $100 house, but you only put down 20%. Okay, so $20. So you're getting 6% on $100. So you made $106, which is better than bonds, but your return, your cash on cash return is higher than bonds and stocks because you only put down $20 to make that. So what is that? $6. What's the return on $6 on 20? It's like 30%, right?
Yeah, you said $6 on $20.
Yeah.
Yeah. Yeah, $6 on $20 is a 30% return.
Yeah. So your cash on cash return is 30%, which is crazy. Okay? That just destroyed stocks. That just destroyed bonds. It destroyed everything. Okay? And guess what? You can rent out that $100 house for a lot of money because people need places to live. Okay? You're renting it out for however much money a month. You're getting that cash flow. Okay? Your taxes, your insurance, your interest. You can depreciate the property over 27 and a half years. You can also do rapid depreciation depending on, how you have your taxes set up. But you get a ton of tax benefits. And guess what? All of that money just sits in there. Okay? And then when you go to sell, you don't even have to pay taxes because, like I said, the rich people wrote the tax system. You can do what's called a 1031 exchange. You kick the can all the way down the road. You get into a bigger investment property. You sell for all your profits. Roll it into a bigger investment property. You pay zero taxes on your profits, and then now you have a bigger property. You're making more money and more money and more money. And then when you want a bigger property, you sell that. Boom. Defer your taxes. And then when you die, there's ways to make it so your kids don't even pay your taxes if they sell the properties. It's rigged, guys, but in our benefit. So use it. Anyways, I know that was a super long tangent, but had to get the point across. Thanks for coming to my TED
No,
Talk.
it's great. Yeah, no, yeah. I mean, I'm be weird if I just gave you a round of applause by myself, so probably won't. But yeah, that's the thing is there's a lot more that goes in it below like surface value. Like normally when people are looking at the return on a house, the one number they look up is appreciation. Like, oh yeah, how much is this house going to be worth 5 years down the line compared to how much it was worth when I bought it? But there are so many more layers to real estate than just that one number. So
yeah. So your overall returns you're starting out, it's the lowest, in my opinion, barrier to entry investment you can make with the highest returns, right? even if you have like a lot of money, right? You have $100,000, which is a lot of money, right? You put that in the stock market, you're only making 10 grand. You put that in bonds, you're only making 5 grand, right? You put that in real estate. Well, with real estate, you could buy like with 100 grand, 2 or 3 properties, depending on the state you're in, right? Or which state. In Utah, if you buy an owner occupied property, you could buy one, and then you could buy an investment property with some remainder. Lower price investment property, obviously, but either way, now you have 2 properties. You're appreciating on 2 properties. You're getting tax benefits on 2 properties. You're crushing it. You're destroying stocks. You're destroying bonds. And people are probably going to be like, well, what about options trading? Have you traded options at all, Oscar?
I have. It is very high risk, high reward, but
Yeah.
it's fun. But yeah, it's very high risk, high reward.
Yeah, if you're trading options, I mean, you can do really well, but it's super high risk. I mean, I trade options daily, and I make, the way I do it is pretty low risk, but my reward is also pretty low. I sell put options. I sell covered calls on all of the index funds, right? So like QQQ, SPY. I make passive income from the premiums on those. I'm not going to get into the nitty gritty, but I make passive income off of those, and I take advantage of the appreciation of the stock. Overall, it works out pretty well. But that's the money that I'm not putting in real estate. I just have it in the stock market. Those do well. But guess what? My investments in real estate would freaking destroy my stock still, even with the options. Anyways, we beat that horse pretty dead.
Yeah. Well, and I think as well, it's important to, like, we're not saying don't invest in the stock market, don't like have other things. It's important to like diversify as well as
Yep.
one of the most important things. And I think it's having, if you're putting all your eggs in one basket, like all your eggs in the stock market, just there's a lot of benefits to having funds in real estate for sure.
Yeah.
And so the other thing, we talked about, mainly we're talking about, you're talking about putting funds into a property, right, and getting back. And so, obviously something that if you put 100K in stocks, right, or you put 100K in bonds, you're not like making payments on those on a monthly basis. And so the other thing with real estate, right, is, I feel like someone listening to this would be like, yeah, but then I have to make my monthly mortgage payment. So with investment properties, right, we're talking about someone who is renting that property and basically taking care of the mortgage. So in this current environment, though, like how often is it that someone's able to kind of have renters fully cover their mortgage, Alex, from what you're seeing?
Yeah, so this kind of just depends on when you bought the property, right? If you're the grandma who bought the property 25 years ago and has like a 2% interest rate on a $100,000 mortgage, you're going to cash flow if you rent it out for like $500. But that's not the case for a lot of people. A lot of people are buying investment properties that they're finding on, they're finding through me. They have me looking at investment properties, and they're buying at today's rate, at today's home prices. That's a little different than if you bought a house, 5-10 years ago, you got a good rate, etc. So for example, and I'm going to answer 2 questions. So 1, how fast can you get them rented out? And 2, how much? Like, will it cover your mortgage? Will it not cover your mortgage? So I have a client who, long story short, we're helping him purchase a home. We had to move his property from selling to renting. So we had to get a renter in there. We only had about a 2-week period to do that. We got it done. We got a renter in there paying exactly what we're asking, a really solid renter. It's going to cover his mortgage and then some, and HOA and everything. So all his operating costs, meaning mortgage, taxes, insurance, interest, everything, covered with the mortgage, right? And he's actually going to cash flow like $800 a month, which is pretty good, or $600 a month. But if you're buying a house right now, right? So let's say you go buy a condo, $300,000 condo, you put down 20%, your rate's like 8.5% or 8%, your mortgage is going to be like almost $2,000, especially with HOA, which usually you're going to be covering the HOA as a landlord. Usually, you're not going to cash flow. I mean, you're going to be hard pressed to find someone who wants to pay $2,300 a month, $2,200 a month for a condo. Good luck, right? So in that kind of a situation, it's not going to cover it. Does that answer your question?
Yeah, it does. Yeah, and that's something I feel like that's a barrier to a barrier to entry for in some people's minds in the current market.
Yep.
But I feel like again, this is true for every investment. Looking things through a lens of just like right now at the exact moment is such a narrow lens to view it, because you're not getting into real estate investing to hop out in a month's time or in 6 months' time. The reason why people get into real estate investing, or the reason why people should get into real estate investing, is so that years down the line when you're retired, you can retire and you've got like these properties that are being rented out and generating passive income for you, right? So everything is, and this is true of the stock market. While the stock market has around like a 10% return, you might invest at a crappy time where think of right when COVID started, or like during the 2008, and the stock market definitely didn't get a 10% return. It got like a negative huge amount, right? And so it's all about long-term gains. Like the stock market was 10% return over a huge window of time, averaging year over year. And so when it comes to real estate investing, you might not be cash flowing right, at the outset. You might not be able to make dollar for dollar back of what you're paying on your mortgage and what you're collecting on rent. But if you can afford to cover whatever the difference is on a month-to-month basis, there's a lot more that you can be getting. Like, you're just talking a minute ago, Alex, of all the additional, below kind of the hard numbers kind of benefits that you're getting. So like right now is at a point where it's slowed a little bit. And so prices have come off of the peaks of where they were at. But that is not something that I anticipate sticking around long term. When the demand really comes in and hits the market again, we'll see an upward push on prices from what I'm seeing. And so even though you might not be cash flowing in a month to month way, like you might be a couple $100 off cash flowing in a month to month way, if you're missing, if your home appreciates by $10,000 in a year, but you are paying the difference of $200 a month, that's $2,400 a miss, but you made, $7,600 more with appreciation. So, even if, and then you have the opportunity where rates are lower in the future that you can refinance so that you're not fully cash flowing. You're not negatively cash flowing forever, right? That's just like a shorter time period. So that's my view on it anyway.
Yeah. And depending on kind of your tax situation, taking a loss can actually be beneficial. And I'm not saying like you want to be losing money, right? I'm not saying go buy investment properties where you're losing $500 a month. What I'm saying is just because you're losing $200 a month doesn't mean you're not going to get anything back at the end. Like I was talking about, there are so many, and maybe we got to have a CPA on here. There are so many tax write-offs with real estate. It's freaking crazy. And you have to take into account not only how much you're going to appreciate, but also how much, taxes you can take off too. Because all of these losses, not only all of these losses, but even if you are killing it on cash flows, if you're just crushing it, right? You're making a couple $1,000 a month. You can still show a loss on your taxes for that property, meaning you don't pay any taxes. In fact, you actually get a discount on your taxes for that property, even if you're crushing it. Now imagine if you're not crushing it. If you're losing $200, $300 a month, now your taxes, you're saving a ton of money on taxes. So just with tax benefits alone, it's a really solid investment. Okay. Your overall return, your overall cash on cash return increases significantly just because of taxes. Now factor into appreciation. Now we're talking, this can be a pretty sound investment. Now you don't want to make terrible investment decisions, right? But that's kind of where we're getting at with this. If you can afford the extra, $200, $300 a month, you're going to make good money, right? So imagine you got to kind of think of it like this. If someone was going to give you a property for $300 a month, that was like you had to pay them $300 a month to own the rights to the property. Would you do it? Right? I would, honestly, but I don't know. Anyways, that's kind of where I'm coming from with that, and that's why I'm investing in real estate. Like a lot of my, like for example, the home that I just purchased a couple months ago. When I put a renter in that, it's not going to cash flow, but I don't really care because I'm not in it for a year. I'm not in it for 2 years. I'm keeping that for probably, 5 to 10 years, depending on kind of where the market's at, depending if there's bigger deals or not. But I'm going to keep that for a long time. And by then, rents are going to be increasing. I'm hopefully going to be able to refinance, get a much lower interest rate, and it's going to be worth a lot more than what I bought it for. And I'm going to continue to do that. So
one note on that. We had the awesome opportunity a little while ago where we did a podcast with Joel Jones, right? He's he teaches landlords how to be landlords, right? And something that he delved into a little bit, which I thought was really interesting, is we often talk about like home prices and being like, oh my gosh, look how expensive homes have gotten, right? That we're getting into a situation that's similar to California, right? But something that he delved into, and he deals specifically with rent. And he talked about how rent is increasing. Like right now we're in kind of where we've come up quite a ways. He said he sees us kind of leveling off, and then he sees us jumping a lot more. And he even used the phrase that he thinks we'll be laughing at what rent is now compared to what it will be in the future. Your mortgage that you lock in at is a set number, right? I mean, property taxes can change and things like that, but your mortgage, the big beefy part of what your monthly payment is you drop it if rates decrease and you can refinance to lower. So your mortgage only is going to go down, aside from like small numbers changing with like property taxes, but your mortgage number can only go down. But rent, on the other hand, has a straight upward trajectory, right? I mean, it bounces around, but like similar to home values, right? Over time, they're going to be going up by quite a bit. And so just if you're not, if you're not cash flowing right now as well, there's the benefits of the taxes, there's the benefits of, there's the benefits of appreciation, there's the benefits of, refinancing in the future to drop your mortgage payment to lower than what it is right now. But there's also the benefits will increase over time, and you will be able to charge in the future, ethically charge in the future, because this will be like what the market rate is, right? You're not screwing people over. You're offering what exists out there, a rent that is higher than what your current mortgage payment is. So that's something as well of just having kind of a, backing out. And I think I agree. I think we'll see rents be more expensive in Utah in the future to what they're at right now. And that negative cash flow is is not something that is going to stick around, in my opinion.
Yeah, it's not permanent. So that's kind of the thing. So there's a ton of benefits of investing in real estate. Whether or not you're able to do it just depends. Let's get into like the different ways to do it, right? There's so many ways to skin the cat, but not all of them are good. Okay. So, I mean, we got things like flipping, we got things like wholesaling, we got long-term, short-term, we got so many different ways. So let's get into each one. So number one, I would say like the biggest one on social media right now is wholesaling. So are you familiar with wholesaling?
You go ahead.
Okay. So basically the way this works is, let's say there's a property, right? Old lady owns it. She's going to die in like 5 years. She's like, hey, you know what? I can't handle the repairs. I just want to get rid of this, right? So what you do is you go up to them. You say, hey, I'll buy your house for like $250,000. You know it's worth like $400,000, right? Cool. So she says yes for some reason. Probably because she didn't hire me. Anyways, she says yes. And you put it under contract, but you don't even have the money, or you just don't even want to take on the work that this property needs, right? So you say, hey, here you go. This contract is assignable. You probably aren't going to tell her that, but you have her sign the contract. You guys are under contract. Before you close on the property, you have someone take over your contract and you make the spread. Okay. You can have an assignment fee and you make the spread basically, right? So you can cash out like $150,000 basically, or whatever your assignment fee is. So that's one way to do it. It requires almost no money. Is it ethical? I wouldn't do it, but some people do. So that's the thing. So is it ethical? In my opinion, it can be. There are ethical wholesalers out there, but I would say for the most part, a lot of them aren't. But that's one way. Now, a flip, everyone loves this one, right? You buy a property, you go get a hard money loan. You're paying like 1% a month on that loan. You buy a property in cash, but you have a loan on it, right? And then you put it in repairs, you sell it for more than it's worth, and you make whatever the spread is, right? So after your purchase price, your repairs, and then your sold price, right? And hopefully it's a profit, okay? Now let's just break those down. Do I recommend them? Wholesaling, it's a pretty quick and easy way to get into real estate. I don't recommend it. I don't think it's super ethical. I think there's better ways to do it. I don't typically recommend that. And two, flipping right now, honestly, I don't really recommend it unless you're buying it to flip it and keep it long term. I think that's a phenomenal idea. But if you're purchasing a property to make a quick buck off of it, usually the turnaround can be anywhere from, 1 to 6 months, right? Between purchasing, fixing, and selling. Well, if you take into account selling, you're going to be like 3 to 6 months. But anyways, I don't recommend that right now. In a different market, like 2 years ago, for sure. I was working with a ton of flippers. Right now, I don't really recommend it just because of how volatile our market is, right? And the uncertainty of everything. Because you can buy a property, doesn't mean it's going to sell for what the comps were coming in at the time. So if you approach me and you say, hey, I want to buy this property. I say it's worth $100,000 more than what it's listed at. You decide to purchase it in 3 to 6 months. We don't really know what the market's going to be like. It could have increased. It could have decreased. It could have stayed flat. And then if you were expecting it to increase and you worked in your margins for, the market increasing or staying the same, and it does the opposite of what you want, you're going to be out money. So
yeah. So
go ahead.
I just want, because we talk, we have said multiple times that we expect, home prices to actually start, when demand kicks in. But we don't have a perfect time frame on that. So yes, home values are a little bit lower right now. But yeah, if you're in a situation where you need a quick in, quick out, then this is a much too a dangerous time, in my opinion, to do it. If you're in a situation where you can handle it, that it's not gonna like that you are in a long-term situation, you can wait and see like what the market does, and if prices do start hitting up, that you can get out then that's a good idea. But yeah, it's betting in this market. Everyone's been proven wrong, so
Yeah.
it's
Like
pretty bit risky.
if you purchased a home a month or two ago in order to flip it and your plan was to sell it in like October or like November or December, you really, really messed up unless, you bought it at a really low price. That's like a terrible plan just because for one, you're selling at the very worst time of the year. Your timing was horrendous, but that's the thing is like, it depends on the market, right? Because I can't tell you, hey, we're going to increase from now all the way to January by this much. I can't tell you we're going to decrease. I can't even tell you if we're going to stay the same. I can give you a guess, and my guess is it's a terrible time to sell, but a really good time to buy, which means that I don't know if home prices will go down, but competition will. Okay. So if that was your plan, you miscalculated. But if your plan was to buy in like December and then sell in June, July, that's a pretty good plan, So it just all depends on the numbers. But do I recommend it right now? Not really. If you're able to purchase a property, your intention is to, flip it, sell it, but you're able to keep it long term in case something goes wrong, I think that's really solid, right? But you don't want to throw all your eggs in the flip basket and then the basket flips and then your eggs are cracked on the floor, right? So that's a terrible idea. Don't throw all your eggs in one basket. You're going to screw yourself over eventually. Okay. Even if you don't screw yourself over with one or two or three in real estate or really in life, if it can happen, it will happen. Something will go wrong and you will lose your shorts if you're all in on something. So that's my opinion. Now let's go into the more, common forms of real estate investing. So now we have our, investor coming in with 25%, investing in something long-term. I guess actually what I've been hearing is that investors, actually, it doesn't make any sense. I'm hearing conflicting reports from the same news channels. Investors are buying a ton of homes and investors aren't buying a ton of homes because of rates. What are you seeing right now?
I think it has calmed down a little ways for investors, just because it's cash flowing is upside down at the moment. So it's from what I'm seeing, it's quieter than it has been previously. I mean, you're talking 2020, 2021. I feel like everybody and their dog was trying to get an investment property. So definitely calm down. But I think, I think it's from what I'm seeing and hearing, it's quieter than it was. So
Yeah. So it's slowing down in terms of investors. God, where was I going with? Oh, that was where I was going with that. Corporations. I mean, I don't know if you work with any big corporations coming in, but I guess, do you have any news of if BlackRock, Blackstone, JP Morgan coming in and buying a ton of properties? Do you know if that's increased or decreased over the last year or so?
I don't, unfortunately. Yeah, I don't have those numbers on me. So, but yeah, I'm not sure. I would imagine that it's quieting down a little bit, but yeah, I don't have specific numbers on that, unfortunately.
Gotcha. So I don't know how accurate this number is. I saw about 26% of buyers right now are like those big corporations or just investors in general, which, as far as I know, is pretty average. About 25% of the buyers are investors. That's pretty about on par of where we're supposed to be. So it hasn't really increased dramatically or decreased dramatically, at least in Utah, right? In other states, probably like Georgia, but here, not as much. Anyways, so long-term investing. How many of your clients would you say are able to cash flow on properties?
Not many. I feel like really, yeah, I feel like generally it's generally you're upside down for a little bit, at least in the outset. So it's not very common that there's a positive right out the gate. But there are definitely a lot of options that exist to kind of cut that down a little ways. So you're either close or you are cash flowing. So, and that often is going through other other avenues of killing your payment. So one way that we have talked about, we've talked in the past of slimming down your monthly payment is, you know, doing things like purchasing a property that has more than one unit or has something like a basement or a what's called an ADU, which is like another unit, kind of like a mother-in-law apartment that you can rent out. So doing something like that to offset your monthly payment, or in like if you're an investor, right, of purchasing a duplex or something where there's multiple streams of income. If you're purchasing a multi-unit property as well, so you're doing like a duplex or something like that, and you're renting out the other half and using it as a primary residence, you can also take advantage of things like to slice down what your monthly payment is, at least from the outset. And that definitely helps with making it so that you're not quite as upside down, or even like are cash flowing on your property. So there are different avenues that you can do so that it's close to the number or even on the money with the number. So what about you, Alex?
Yeah. So my expectation with my newer investors is that you're very much going to be losing money every month. There's depending on the investment property and depending on location, there's almost no way to really make the numbers make sense in terms of a cash flow perspective. So like my out-of-state people, my in-state people, my number one question to them is, are you trying to cash flow or are you after appreciation? If they're after cash flow, I'm just blunt and honest, like you're not going to find much. There are a couple ways to get around it though. So for example, and I don't even think we're going to have enough time to go through each one, but like you have your short-term investors. You have your longer-term investors who are coming with like 25%, and you have the people who are owner occupying and then, you know, moving each time, keep putting a renter in the last one, right? So each one of those has their pros and cons, right? Long-term investor, your rates are going to be complete garbage. A lot of the times it's going to be really hard to not be losing money in terms of cash flow every month. However, it's a lot more scalable, okay? Because if you have a ton of cash, you don't have to live in a property every year and move, okay? Your financing terms aren't going to be favorable, but you can buy 20, 30, 40 properties because you don't have to live in every single one, right? So you're able to scale a lot easier and take advantage of tax benefits, but your financing is going to suck. So that's my expectation is, hey, you're not going to cash flow. But that being said, that's not really the whole reason to invest in real estate. Like I said, there are ways to get around that. Or like you said, one of the ways is purchasing a cash flowing property or a property that can cash flow. Like let's say you buy a single family home that has the option of putting in like a basement apartment. And let's say you get a good deal on it, but you have to put in a ton of work. Eventually, after you put in the work, you can make that property cash flow, right? Or like a big apartment complex, or like a duplex or fourplex. These are properties you can improve in order to make cash flow. Meaning, you go in, you fix some stuff up, you make some updates, and then you go in and increase the rent. Okay. The other thing that's going to hurt you too is as you start scaling, you're going to have to start getting property management in place because your time is going to get more and more valuable and you're not going to be wanting to spend it handling toilet questions, right? So then you're going to get a property manager in place and then your cash flows are going to decrease from there, right? About 10% per month per unit. And then, the fee to get a tenant in place, right? So your cash flows as you scale and you get more property management in place is going to be even worse, right? Because for one, your rates suck. You're not cash flowing. You're losing money every month, but now you got to get a property manager in place. So you're going to be losing more and more. Plus side, these things are tax deductible, right? I'm just kind of screaming through these, but the other one is the person who is owner occupying each property. This is actually my strategy because for one, I don't have, $1 million to go just deploy in 50 properties, right? Unfortunately. And two, because I get to go at my own pace, right? I'm going to be purchasing properties for myself anyways. Might as well keep them and turn them into rentals, right? So I'm starting with one. I'm able to get really good financing. I got a 3-2-1 buy down on it. So my interest rate's 2%, like 2.6%. And then once I move out of there, I get a property manager in place. And then my escrows increase because my taxes come due again. I'm not going to be cash flowing, but I'm not going to be losing very much money anyway. I did the math, probably about $100 a month. Okay. Which isn't ideal, but it's not very much. The next property I purchase, I'm going to put down 3.5%. I'm going to have a basement apartment in it, and I can rent out both when I move out. That property is probably going to cash flow by the time I move out. And my condo, right, the one that I'm in right now, is also going to be cash flowing by then because I'll be able to increase rents, etc. Okay, so you can do that. I think it's like 10 times you can do that. You can have 10 owner occupied properties.
Yeah, normally that's
about the limit. So that's what I'm going to be doing for basically the next 10 or so years. And it doesn't even matter. Even if I have $1 million, I'm still going to be doing that just because, in my opinion, that's one of the better ways to do it. Unless something changes, that's what I'm going to be sticking to. So your barrier to entry is a lot lower because you don't have to put in 25%, right? You're able to live in it. You don't have to keep renting. And then when you move out, you're able to put a renter in there. So I know I just went off on a tangent. Do you have anything to?
Yeah, well, I just think, that it sounds like work, but anything worth doing requires work, right? And there is no easy way unless you do win the lottery, like we were talking about, of just like suddenly having a real estate investment empire, right? It takes a lot of cash, right? Or it takes a lot of time. But you think about, you do have, let's say we talk about that 10 properties, right? That you've done that 10 times throughout the course of your life, and let's say you call it quits at that point, right? And you've got renters in there that have been paying your mortgage payment each month. The amount of equity you're going to have in all of those properties is, over time, the renters will have been making that mortgage payment, paying off the loan that's on the house, right? And you're going to have all of this passive income that's going to be coming in, and you can either, keep those and hold on to them, or kind of as you were talking a little bit earlier about, Alex, of like selling them and putting them in, an even bigger property for an investment, like an apartment complex or something like that. So it takes a little bit more time doing that avenue, but the amount that you're chucking in, you're not having to fork over, hundreds of thousands of dollars with each property. And you're able to, have someone else that's taking care of the rent, and, gain that equity over time and gain that passive income. So even if you're not cash flowing right out the gate, and even if you don't have tons of money to be able to chuck down on a house, the most important step in any journey is the first step. And that first step is actually just buying your first property. So if it's a condo, buying a condo or a townhouse or whatever, because that's going to be your property that you're going to be able to rent out in the future. That's, rents are going to be increasing, right? And that means if you're not a homeowner, right, that's the money that you're paying. If you are a homeowner, that rent is the money that you're going to be getting paid. So there's, we can, there's benefits definitely outside of just kind of the basic number of owning a house. But yeah, as I said, the first step of the journey is getting that first house. So, but do you have I think we're coming close. Did you have anything else on investments you want to chat about, Alex?
Yeah. So, I mean, I eventually want to make a video specifically going after kind of your returns on each one, right? Each investment style, what kind of potential returns can you get? If everything goes right, if everything goes wrong, what's the best worst case scenario? But unfortunately, we just don't have the time for that. So that'll come eventually. This is kind of just a broad overview, the different styles, your returns, I guess, versus other investment avenues. Pros and cons a little bit, but we do want to get more in depth in this. If you guys have any questions, make sure you guys reach out. We have a lot of new things to go over and a lot of new things coming. So make sure you guys subscribe and stay tuned. We didn't hit that million mark again. We screwed up, but we're getting closer. We're almost at 1,600 subscribers, but we're coming up on that pretty close. I don't really have anything else to add. What about you?
No, yeah. So I think, as you said, we'll dive more in depth, taking a look at having a condo investment, a townhouse investment, a house investment, how it compares with rents and different things. And we'll chat more about it. But anything that, we love delving into everything real estate, funnily enough. Sounds familiar. But if you have any questions at all about anything real estate, anything and everything, let us know. We'd love to hop into it. But until the future.
Well, cool, guys. I appreciate your time. Well, we appreciate your time. Like I said, if you guys need anything, reach out to us, or all of our info's down below. But you guys have a good rest of your day. Peace out.